You know that feeling? It's usually a Sunday night, right? The dread starts to creep in. You're thinking about Monday, another week, another year, and this little voice just pops into your head and goes, wait a minute, is this really it? Just this endless cycle of work, sleep, repeat?
So here's our game plan. We'll start by talking about that Sunday night trap. Then we're going to challenge some of that conventional wisdom we've all been taught. And after that, we'll dive deep into the 2-3-5 framework, from the tough beginning to the scaling explosion, and finally, to your path to real choice.
All right, so let's talk about this trap, because I bet it sounds familiar. You're doing all the things you're supposed to do, right? You work hard, you try to save, you might even be investing a little. But that whole traditional retirement thing, it feels, I don't know, like a fantasy, like it's for other people, not for you.
And what's so frustrating is that you're not being irresponsible. You are trying. You're putting in the work. But the progress is just so darn slow. Freedom feels like this far-off dream, but the bills hitting your inbox every month, the desire to just take one nice vacation without feeling guilty, man, that feels very real.
So what if, and just hear me out, what if the advice we've all been given our whole lives is just wrong? Or, maybe not wrong, but just not the fastest way to get there. It's time to challenge some of that old school thinking, because there is a totally different way to look at building wealth.
The big myth we all hear is that you either need a massive six-figure salary or you had to be some investing genius who started at like age 12. But the reality? The actual data tells a completely different story. The #1 predictor of success isn't your income. It's the speed at which you can get your money to a certain critical mass. It is all about how fast you can hit that tipping point.
And this is the secret sauce, right here. Building wealth isn't this slow, steady, straight line going up. It doesn't work like that. It happens in phases. And it's not just me saying this. Big firms like JP Morgan have research proving it. The people who achieved financial independence weren't always the highest earners. Nope. They were the ones who were super aggressive about building up capital early on. Understanding these phases, well, that's the whole game.
Which brings us to the main event. The 2-3-5 Money Explosion Framework. This is the blueprint. It's a very structured, 3-phase plan designed to do one thing: cram a lifetime of wealth building into just 5 super-focused years.
So here's how it breaks down into 3 totally different stages. Years 1 and 2, we call that brutal accumulation for a reason. Then, years 3 to 5 are all about aggressive scaling. And after year 5, that's when you hit what we call financial optionality. Look, each phase has a totally different mindset and a different goal. Treating them all the same is probably the biggest mistake you can make.
Okay, let's get into the first phase. And I'm going to be real with you. This part is tough. It is not sexy. It's not glamorous. It's going to require some serious focus, maybe even a little temporary imbalance in your life. This is the foundation. And honestly, it's the hardest part of the whole thing.
So what's the goal? It's one simple, crystal clear number: $100,000. Your job in this first phase is to get $100,000 invested as fast as you possibly can. Now, I know, that number might sound huge, maybe even impossible, but hang on, because it's not just about your salary. Let's just look at the math real quick. Say you make $55,000 after taxes, and for a little while, just temporarily, you can get your living expenses down to $30,000. Well, that's $25,000 a year you're saving. On its own, that gets you to $100K in 4 years. Not bad. But what happens when you factor in a raise or a side hustle, plus the early investment returns? Suddenly, you can squeeze that timeline down to just 2, maybe 3 years. It's all about that short-term intensity. And here's the thing you have to understand. Your brain is going to hate this phase. I mean, absolutely hate it. Why? Because you're putting in a massive amount of effort, but the rewards, they feel invisible. The progress feels painfully slow. And this right here, this is the filter. This is where 90% of people quit. But if you can just survive this part, you've already beaten almost everyone else. And that is exactly why you have to push through. Because once you've built that foundation, everything changes. You graduate to phase 2, the scaling explosion. And trust me, this is where things get really, really exciting. This is where the math starts to do the heavy lifting for you. That $100,000 mark, that's the magic number. It's the tipping point. Think about it. At a pretty standard 7 to 10% return, your money is now making you $7,000 to $10,000 a year by itself. Your money just went from being a lazy pile of savings to being your hardest working employee,
It works 24/7, never complains, never takes a vacation. The returns are finally big enough to feel like a real second stream of income.
And this is that snowball effect everyone talks about, right? In action. You start with your 100K base, you keep saving like you were, but now the growth just takes off. It goes exponential. You're not just adding your own money anymore, you're adding your money plus a big chunk of investment returns. The whole pile just starts growing faster and faster all by itself.
So this all leads us to the final phase, which is really the whole point of this entire thing. And we've got to redefine what we mean by retirement. Forget the old idea of just stopping work. This is about something way more powerful, gaining choice.
The real prize, the end goal, is what we call financial optionality. What is that? It's the freedom to choose. It's the point where your investments are big enough to cover your basic living costs. And when that happens, a full-time job is no longer a necessity. It becomes an option, a choice, and that changes everything.
So how does this work in practice? Well, there's a famous study, a lot of people call it the 4% rule. Basically, it says you can safely take out 4% of your portfolio every year, and it should last forever. So if you have, say, $400,000, that's $16,000 a year. Now, you might be thinking, $16,000? I can't live on that. And you're right, but what if you combine that with a part-time job you actually like? Suddenly, the 9-to-5 grind, the system, it starts to lose its power over you.
Okay, so if the math is so simple, why isn't everyone doing this? It's a fair question, and the answer has nothing to do with knowledge. It's psychological. It's our craving for comfort. See, most people would rather put up with a low level of pain forever than go through a short, intense period of discomfort to fix the problem for good. We trade a few years of intensity for a lifetime of just getting by, and that trade-off is incredibly expensive. So what can you do like today? 4 simple things. 1. Set a 24-month target. Pick a real number and a hard deadline. 2. Automate everything. Make saving happen without you even thinking about it. 3. Focus on income first. Don't worry about picking the perfect stock. Worry about getting more capital to invest. And 4. Track your net worth, but only once a quarter. This keeps you strategic and stops you from making emotional, panicked decisions.
Listen, if you feel stuck, I want you to hear this. It is not because you're bad with money. It's not because you started too late. It's probably just because you haven't tried compressing the hardest part into a short, focused sprint. The whole idea boils down to this. 5 focused years can completely change the next 50. So the only question left is, what could you do with 5 years of real, intense focus?